Welcome, Blockhead Traders. Here at Blockhead Traders, I must inform you that we are not financial professionals. Nothing we say should be considered financial advice. We offer our own thoughts and opinions to you, the viewer. We expect you to form your own opinions and come to your own financial conclusions. Today is Wednesday, August 11th, 2021, and this is Blockhead Traders Weekly. We're recording a little bit off our normal cadence of Sunday night recordings this week, and we are going to bring in two blockheads this week. I know it's been a while since we've had both of us on the show, but we're going to have myself, Sprocket888, and we're going to bring in Viper XL007 to the conversation. And this week, we're going to kind of have a casual conversation about different ongoing trades that Viper and myself have, a couple of new strategies that we might be experimenting with, kind of talking through what we're seeing, what we're looking at, how we're approaching it. But before we jump into that topic, I want to give a quick shout out to our Discord channel as well as our link to thetagang.com. You can find both links in the description below. Discord channel is a great way to interact live with fellow Blockhead traders, myself and Viper.
And actually, there's been a lot of daily discussion lately between a few of the members on the Discord, which has been very good. You know, get some ideas, get some trade ideas, see what people are thinking or why they're doing it. So definitely recommended to come check that out.
Let's hop to this week's episode. And Viper XL, why don't you start us off and tell us what you're looking at and what you're trading these days?
Yeah, so I wanted to revisit something that our long diehard watchers may remember. I mentioned a strategy I was testing out back then. I called it like this overnight scalp. It really never has panned out great to be an overnight scalp thing. So now it's just becoming a strategy that I'm working on. This is very much a work in progress, but I am seeing some hopeful signs with it. So let's hop over to the screen here. I want to step you through kind of my screening criteria and how we get here. So this is the website FinViz, highly recommended. Just a great resource to dial up an underlying, get some information on it, whatnot. So real quick, how I get there, there's this screener here. I go in there, I set some criteria here. I mean, this is still evolving, so I'm not really going to walk you through all of these. I mean, you can kind of see what I'm going after here. But the main point here is once you dial in whatever you're looking for, you get this list below screened. My favorite part here is jumping to the charts. So right here, you can go into charts. You can dial it over to the candle type of chart. And so now we can just fly through, because a lot of the trading that I've been doing lately is, you know, looking for patterns, looking for setups to strike on. And so this is just an invaluable resource to just fly through these charts. This CFG down here, this is actually looking kind of like what I would be looking for. So let's make this a little bigger. Well, actually, it's missing one critical thing. So not quite, but in general, I'm looking for a downtrend and then signs of a reversal. And then what's key, and we'll make this bigger in just a minute, but key to what makes the reversal is you have these highs, you're getting lower highs as we go down. The sign of a reversal then is that we make a higher high than the previous little swing. So in this case, this looks like it's what I'm after. However, it fails the second criteria, which is we look down here at volume, and in conjunction with a potential reversal, I want to see a pump in volume here, an abnormal spike, which really shows momentum swinging to potentially support that reversal. We don't see that here, so immediately I'm going to scroll on and just keep going through. So let me just grab a ticker that I did play, ASTR, and this guy. We'll look at the chart a little bit better, but the chart meets what I was looking for. And then the other thing I love about the FinViz here is we can come down here and we can look at news. And so the third thing that I'm looking for is this correlates change in price with a particular article that might be out there on the internet. In this case, this play is already done, but at the time I came in here and I looked and I saw everything I wanted to see on the chart. I come down to the news and I see Astra announces multi-launch contract and first launch with Department of Defense. Wow, that sounds awesome. I don't care about the specifics. I'm still making a short-term play here, not going long on this. This has everything I need. It hits all three things: potential reversal, volume pump, and news that is exciting to people. It's bringing people in. That's all I need. And so then I go and we'll make a play on that. So let's go look real quick at the ASTR chart. So here's a better view of that volume. If we zoom way out, you can kind of see how, let me get this out of the way. Kind of see how this was this was a very abnormal volume. We were running way down here. We got a little bit here. We came back down and then boop, came back up. So this was also a downward trend. We got some lower highs on the dailies coming down through here. We hit this pump. I obviously missed that. This was a big jump that would have been nice to catch, but I'm looking for a close above one of the previous highs. And so I'm not going to touch this until I see that confirmation. So this did it. And then I jumped in somewhere around here around the 1050 mark on the second day. So I got in, I rode up, and then somewhere here on the third day when things were starting to look gassed, I got out. And look at that. Good thing I did, because that's the kind of play this is. This is a 2 or 3 day thing. Ideally, you can't always script it though. So another one I did, PLTK. So again, we kind of see this one has been questionable. Currently, as of this recording, I'm dead flat on this thing. I kind of got in a little late, as you can see from the current price. But it met the criteria mostly. So this one was a little bit more questionable. Like I said, feeling this out, ironing it out. However, we came down, we got this big clear up, which wasn't quite high enough for a close as I would have liked. So then it was open the next day. That's when I jumped in. So potentially broke my own rules, and that may be why I'm, in this position where I'm just kind of going flat, because I'd rather put this money to work somewhere else. If I'm dead flat, let's just close it and move on. I don't like lingering here on something I don't know much about. Let's see, LAC was another one, and this one's still going, and this one is positive. This one met everything I wanted. It closed here above these previous highs. We got this volume surge. And so I jumped in on this day, right about 1630. And so we're riding up, but this is the volume still high, but the candle is really thinning out. So I'm a little worried this isn't going to quite hit my target. I OCO these orders, which means order cancels other. So I have a profit target. I won't go into it, but I set it based on price levels that I see. I have a stop loss, and I just let these things ride, unless I get antsy, or like right now, or maybe I just want to get out of this thing because it's potentially hit the top. But this one's still making money and looking good. One that is backfiring is FSR. Oops. Let me grab this. So this one, this was a big pump again on news. So there was a big volume surge here. We came up, but then day two, we didn't do anything. I probably bought at a bad time because nothing happened on day two. So we had this thin candle. And so right now I'm actually 9 cents away from my stop loss. So I'm probably going to get stopped out on open. But that's the way it works. So, I mean, I guess 4 plays, 1 big banger, 1 is currently making money, 1 flat even, 1 loss. So 3 out of 4 ain't bad, right, Meatloaf? Oh no, that's 2 out of 3. Crap. I'm really just dialing this in. You can already see just based on any information I gave you that this wasn't super consistent on the ones I chose to play. I tried to be consistent, but I'm still feeling it out. And obviously, like I said, PLTK, this maybe never should have happened. FSR maybe never should have happened, but that's part of life here is feeling it out, get in there, mitigate your loss, stop. Like I said, stop losses on all these. FSR is about to stop out. Whatever, let's move on. So that's kind of what I'm up to, what I'm exploring.
Well, I have a question for you before we hop over to anything I'm trading.
Yeah.
Uh, when you're hopping in these trades, you know, you mentioned you're looking for a close above a certain level. Are you getting in after hours, right after that close? Are you getting in the next pre-market hours the following day? When are you entering these?
Right. Very good point. So yes, I try to enter that day on that close. And so I know that that sounds like, oh man, like you got to be lucky to catch that. But how many listings are there in the, like, there's a ton of, like, you'd be surprised how often that you could stumble across, and it doesn't happen every day. So, you know, there's days where I scan through that screener. Nope, nothing's looking good. Move on. But yeah, so I try to jump in on the close that closes above the level I'm looking for in after hours, because previously when I mentioned this, I mentioned it as an overnight scalp thing. Because if you're not PDT, you could potentially buy right after close, and there usually is a surge after hours, potentially pre-market, to keep you PDT clear. And on some of these, I mean, so that is still a thing. I have noticed that after hours, there on a number of these, there is a jump after hours, like FSR. It might have even been where I had an opportunity to make some money, but I wasn't paying close enough attention, and I kind of gave up on that because after hours is just really hard to keep track of and not just watch like a hawk. And a number of these are panning out in regular hours. So the after hours thing is something I haven't fully figured out how to get a handle on. But yes, I try to buy that day just after close.
Yeah, so I've been spending most of my time lately kind of in the futures world, looking at different futures plays and things like that. But I think we'll save some of the futures discussion for a future episode because some of that stuff can get pretty confusing. But the one thing I think I'll touch on in this episode is a new approach that I've always kind of talked about, but I haven't actually started doing. And I decided, hey, now is as good a time as any to start that. And that's really starting to build out what I'm going to call my dividend portion of my portfolio, or the anchor of my portfolio, where I want to start turning some of my capital and invest it in companies that I think are good long-term investments that are going to pay a dividend while I'm, you know, letting the appreciation of the stock kind of rise over time. And one of the ways that I'm entering these is also a little bit different. I'm basically entering them not by buying the shares, but by selling premium to get into those. And so what I want to kind of chat about is Citigroup. All right, let's hop over to the Citigroup chart and take a look there at what we got going on. So one of my favorite charts to look at, because my typical trading duration is usually on the order of a few weeks, usually 2 to 4 weeks. And so I really like the daily charts. And so I'm just real accustomed to kind of looking at underlyings with daily candles. And so what you have here is basically Citi's chart on daily candles. And what I noticed is, you know, the banks got hit pretty hard when the interest rates started to really fall recently. And it's kind of been hanging out down here close to the 200-day moving average. And for the most part, I think the financial sector is in a really good position overall as far as where it stands in the economy. You know, interest rates rise, the financial sector probably stands to gain from that. They are much more equipped with liquidity than they were back in the financial crisis back in the day. They conserved a lot of money through the recent pandemic. And so overall, I'm pretty bullish on banks in general over time. And banks typically also have excellent dividends. And so what I started looking at the different dividend rates of the banks and where they stand on, are they actually on a discount at the moment in time. And I basically came to the conclusion that Citigroup is a strong bank with the fundamentals. And I didn't do very detailed fundamental analysis, just basic kind of P&E ratio and how they stack up to the industry and their competitors, as well as looking at the dividend yield and looking at the stock price were kind of the three things that I looked into. So at the end of the July, I basically sold an at the money put. And you can go back to a previous episode to kind of where I talked a little bit about this strategy. And I wanted to kind of resurface, where I stand with that. Sure enough, shortly after I sold that put, the stock just really started kind of climbing up here. Just day after day after day of constantly riding up. And call it chasing. I don't really call it chasing because this is definitely something I want to own. And it looked like there was a lot of volume and a lot of strength in this kind of recent rally. And so one of the things that I did just this past week was I actually closed out my original short put position. Let me pull up a couple of my orders here. And you can see on July 29th, this is where I sold my $2 put. And it was rising and rising. And so what I ended up doing was I ended up selling or buying back that put for 37 cents. So on August 9th, I bought that $69 put back for just 37 cents. I was able to lock in about $350 in profit because I did two contracts, and that's the difference there. And then I entered again at $72.50, again, two contracts because I want to own about 200 shares of Citigroup, collecting another 273 per contract. And this is my current open position right now. And of course it's in the money. If we want to take a look at the P&L chart right now, we're in the money. I'm going to let this one sit for a while. I think we still could see a pullback a little bit below there. The key point here is that, if this thing pulls back into the money where I actually get assignment, I'm actually picking up about $4 on the Citi, each 100 shares. I'm basically getting $4 off. So I collected, $800 in premium waiting for this thing to hit. And if it keeps rising and keeps running, I'll do the same thing again once this extrinsic value kind of falls out of the option. Wherever this is sitting, I'll probably buy that option back for, 10, 20 cents and sell anew at the money and collect more premium and just keep doing that until I can finally land that assignment that I'm after.
So that's interesting because, I get, like you said, this isn't chasing the money per se. I like the usage of it because I think for anyone who doesn't know options and put selling, you keep in mind, even though technically you're raising your buy-in, you're also collecting money as you raise it. And so I guess to me, what would be interesting is what, if you were bullish on it, if you wanted to own it, what are you raising versus if you had just bought in straight out? Like, have you done any thought or analysis along those lines?
Yeah, a little bit, but not tons. So the reason I just kind of don't just straight buy in is because, what if it falls? You're never really going to ever buy at the top, and you're probably always going to buy at the top. You're never going to buy at the bottom. I bet you do. And selling at the top probably isn't really going to happen either. And so what this does is it kind of says, hey, give me a little bit of margin of error. And so if Citi is trading at, let's say, $70 today, and I sell a $70 put, and Citi, that gives me a cost basis of $68 if I get assigned. And that basically means if I'm assigned, it's going to be less than $70. So if I bought in today and the stock falls $2, let's say, right, I'm now $200 in the hole on that Citi trade, if it falls to $68. If it falls to $68 and I get assigned at 70, okay, that's great. I still collected $200 in premium for that. So, my cost basis is now right at 68. And so what it allows you to do is it allows you to be a little bit more forgiving when it comes to that entry price. It gives you a little bit more buffer for that kind of initial entry and the initial bump.
Yeah, it makes sense. There's a lot you need to keep track of to know where your cost basis is. Like you mentioned with stocks, it's pretty dead simple. I bought here, that's my cost basis. I bought more, run the average of how many shares, all that kind of stuff. Everything will tell you what your new cost basis is. There it is, right in front of your face the whole time. Do you ever have any issues in this case? I guess in this case, you've sold, you've collected premium twice now. How does that chasing like that, does that change any, or how do you keep track of that cost basis as you go?
Yeah. So, first I want to caution you, the cost basis that I'm referring to and that Viper is referring to is really just an imaginary cost basis or a perceived cost basis. When you go to file your profit and losses on your taxes and things like that, your cost basis is going to be calculated off of where you bought the share price and where you sold the share price. Like 100%, that's what it is. Your options premium plays that you're doing on the side, those are going to be evaluated at the face value for those trades as separate and independent. So what I'm doing here is really just kind of looking more holistically at my portfolio and kind of taking those gains and calling them against my cost basis of my shares from a gains and loss perspective on taxes and your 1099Bs. This doesn't change your cost basis on your shares, just to be clear. Yeah. So what I do is I actually keep track in a journal. There's other ways to kind of do this, I think, but we've gone over this in a previous episode. This is my in the position sizing episode, but this is my trading journal. And what I do is I keep track of each of the positions I'm entering, where I entered them, what type of credit I received from them. If I did a roll, what type of roll extra credit am I picking up? And where is it sitting? So in this particular city trade, because I actually haven't taken assignment, this is all being tracked on one row. So this previous one was a previous venture into city that I traded. This is the actual one that we're talking about here. And so what you see is my original credit of $4.12. That was my two contracts at 206. And then when I closed out my position for the 37 cents and then resold again at 273, the net of that was $2.36 times 2. So you can see that so far I've collected $8.84 in credit on this Citigroup trade. And this is where I keep track of that. So I know that should I ever get assigned, this credit received here is what that lowering of that cost basis would be. So for Citi, it basically would be reducing this by $4.42. Well, hey, let's take a look at a different trade that I've kind of been playing around with a little bit when it comes to shares too. It's a little bit more to track, but I got into Beyond Meat. I started this one off as a covered call. So back in end of May, you can see right here is where I entered this position. I basically bought 100 shares of Beyond Meat at $148.59. And I immediately sold a 165 call against that, collecting $8.19. So right there in this one transaction, I lowered my Beyond Meat entry point to $140.40. Now this was a covered call. So that basically means, if this stock was to rally from 148 past 165, I might be at risk of being assigned, but that's okay because I bought the shares for, $148.59, minus $8. So basically that's $140 cost basis. So if these were called away at $165, that's a $25 profit or a $2,500 profit. So what ended up happening, let me just pull up the chart of Beyond Meat because it'll help a little bit. right here. So it had just broken above this 200-day moving average. This is where I sold the covered call. Down here, you can see the implied volatility was quite high. And that's why I was able to actually sell a call so far out from that at 165 for $8. Well, Beyond Meat never got up there. It just kind of traded horizontal here for quite some time. I ended up buying that call back for, let me jump back to my order screen here. You can see I bought that $8.19 callback for 44 cents. I really just felt that Beyond was now in a channel, so it wasn't really trading up, it wasn't really trading down, so I actually sold a strangle. So a strangle is basically a naked put and a naked call. Now, technically, my call wasn't naked because I still had those 100 shares. So in this strangle, I basically was unprotected to the downside, which to me was okay because this says, hey, if it gets below 130, you're going to buy another 100 shares at 130. Well, my cost basis was already 140. So if I entered again at 130, okay, great. Now I've got 200 shares with a cost basis of 135. 160 is where I would have to my 100 shares called away, but that's still $20 above my break-even point previously. And the strangle basically netted me another $12.31 credit. So after this, Beyond really started showing signs of weakening. It basically started falling below the moving averages, below the 200-day moving averages, and I thought this thing was going full-blown bear on me. And so I said, well, I might as well capitalize while volatility is still high. And so I decided to sell another naked call against it at 160, collecting another $2.45 profit. You know, continuing on, it was still struggling and actually below my put assignment price. And I was really debating on whether or not to take an assignment here or to kind of push it out. And I was able to kind of buy back my put with almost no extrinsic value left. I mean, it was pennies of extrinsic value when I made this trade on August 20th. Yes, it says $10.12, but that was because it was in the money by a significant bit of dollars. And you can see that I basically turned around and then sold 1 month out the next strike at $12.77. So the intrinsic value here, I basically is a wash. And you can see I collected another $2.65 credit. Now, kind of carrying on, if you are keeping track, I basically was 2 calls in, or short 2 calls at 160. And Beyond was just really down there. It was really close to expiration. These expired August 20th. Beyond actually started to show signs of bottoming. And so I said, you know what? These are as far away from the 160 strike as they're going to be. Let's go ahead and just close them out for 25 cents. So I went ahead and said, well, you know what? I've collected all these credits, which basically lower my cost basis significantly from that original $140. So yeah, I'm cool if we sell at 145. So I sold another call at 145, or yeah, 145 strike for an additional $3.15. Now, I've probably confused you because that's a lot of buying and selling premiums. And you can see I keep track of all of my Beyond trades here. I have collected a total of $28.75. So if you take my original purchase price of those shares at $148.59, and then you lower that by the $28.75 credit that I've collected over time here, you can see that my cost basis for those 100 shares of Beyond Meat are now at $119.84. And so this is an excellent example, in my opinion, of how you can take your position that you have in a stock and buy and sell options around it, collecting more premium, while if you look at the chart, you know, your stock is not really going anywhere. So remember, I came in right here, and, you know, here's where we are now. Not much has happened with the stock. Yeah, it kind of swung up, kind of swung down, but in general, it's not going anywhere. So this whole time, I was able to kind of milk money off of this thing without actually seeing the underlying move.
So in all of that, we're talking fairly sideways, like you pointed out at the end. You come out, let's see, what was it, $2,800 ahead, and you held 100 shares that whole time.
Yep. I still have 100 shares to this day. That's right.
So, I mean, the power of options right there, but also important to point out the power of volatility, no?
Oh, absolutely. This type of strategy doesn't really work that well in low volatile stocks. You really need that high volatility. And if you just take a look at the chart, and down here, I always track volatility and where it sits historically. And this was a relatively highly volatile name. So this absolutely volatility is there because volatility means premium.
So that's worth considering. And I've shot for this. I don't know. I mean, I guess it's an outright strategy, but I mean, I've shot for this scenario before. But before buying, I mean, it's important before buying that 100 shares. Check the options chain, check the volatility. Make that one of the data points. Because I've certainly turned stocks away because I've gone and looked and there's nothing there.
Yeah, I mean, just to give you a hint, I'll just pull up the option chain here real quick. For September expiration, I mean, you're talking quite a bit of premium here. So even like a 20 delta put at 115, selling a 115 put and Beyond Meat, you're going to collect $3 of premium on that. The key point though, one of it is you really got to keep track of what year we're trading in a trading journal, because if you look at what my P&L chart shows in my brokerage account here, you're like, wow, it looks like you're really far in the hole in this trade. And it's not true. So that is my Beyond Meat play that I have going on and my Citigroup play. And I say those are a little bit abnormal for me because it's very seldom in a lot of my trading videos so far. And if you look at my Theta Gang postings, I don't typically hold shares and I don't typically aim to own shares like I'm doing with Citigroup. But like I said, I'm trying to figure out how I can kind of use the options out there in the world to juice a little extra income, when I'm trading around shares of stock. That brings us to the end of this week's episode. I hope that maybe we've sparked a little bit of curiosity on your part, maybe given you some trade ideas for your own to kind of explore. Like we mentioned before, hop in our Discord. We're really starting to pick up on activity in there. It's a great place to share trade ideas in real time with some of the traders in there. There is some really good charting that's getting posted in there. Really good feedback so far. Very supportive community. Love to keep it that way. Love to have you contributing in there. Hopefully you've also seen a little bit of how you can kind of take options trading, which is what I consider my bread and butter, and kind of maybe start sprinkling something that you're more comfortable with, maybe owning shares or trading shares and experimenting and sprinkling around different strategies around options to really start understanding what they are, understanding how they can provide you a little extra premium, a little extra juice, a little extra income in your approach. I hope everybody has a good rest of your trading week this week. Good luck. And remember, think outside the block.